Morning, everyone. Good morning. Hope you guys are doing well. Today is March the 3rd. As you can see, overall markets pretty nice bounce towards the upside yesterday, filling the gaps back towards the upside, right back in between its previous day's range. And then, of course, as you can see in the overnight session, really big drop right down in towards our key levels here on the higher time frame. So overall markets right at the low of the range here. So a lot of things to kind of talk about coming to this morning. Decent amount of volatility as well. Basically similar thing to yesterday. Big drop coming into market open. So we'll go over a bunch of the levels that we're looking for coming into today. We'll kind of talk about exactly what the key levels are, some of the main watches, right? What to expect kind of moving forward. And of course, yeah, let's just get right into it. First, before we do that, what's up, everyone? Good morning. Good morning, B Roots, Victor, TW. Good morning, Cody, Marcus, Andreas, Deuce, Limit. Good morning, Cosmic. I am Josh, Martin, Robert, Cinna, 50, Monty. What's up, everyone? Good morning, Trent. First time here. Welcome. Yeah, what's up, everyone? Hope you guys are doing well. Let's first start off on the major indices. Actually, before we do that, sorry, let me pull up the economic calendar. Oops, let me fix something real quick. Okay. So yeah, coming into today, clearly something's not working, but for the economic calendar, as you can see, the main thing that we had over night was just some more war news. Overall, right, the longer it does drag out, the more uncertainty the market's going to have. So we're just going to have a lot of volatility to both ways, right, up and down. So currently, as for the actual economic calendar, right, for the red folder news-wise, right, this isn't going to matter as much compared to the news that we have with the war. So the economic calendar, the red folder news, right, we have some on Wednesday. That's going to be at 8:15. ADP non-farm enrollment change. We have ISM services, unemployment, and then of course on Friday we have core retail sales along with non-farm enrollment change. So this is what we have for at least the red folder news-wise. As I mentioned, this isn't going to impact the market as much compared to, of course, right, what we have going on currently. So let's go back on to the charts and let's go on to the major indices coming to market open here. So let's first start off on the higher time frames because that's what's going to be key here. Number one, let's go on to the SPY chart. So as you can see here on the SPY chart, we're looking at the daily time frame here. As you can see, we're just kind of ranging in between our 700 along with our 680. And as you can see right here, we've just been stuck in a range ever since 2026, right? So for the first 2 months of the year, we've just been ranging in this general area. If we can break now finally underneath. Yesterday, I thought we are just going to come right back inside the range, but as you can see, now we're dropping close to the bottom of the range once again. We have multiple touches, and now in the pre-market, we're back at the 677.50. If we can break underneath this range here today and moving forward, potentially we can have a bigger pullback here in the markets, and maybe we can start downtrending towards the downside to target our 670 along with our 650 here on the higher time frames. If we have some buyers step in, we're just going to come right back in towards this general area, which we've been at for the past 2 months. So that's why, right, a lot of the market has just been more mean reversions. If you look at this on the hourly time frame, a lot more mean reversions, as you can see right here. If you go back onto the drawings here now, what are the key levels that we have coming into today? And what is the game plan here on SPY? So coming into market open, we have a couple key levels that we're going to have marked out. We can also now mark out our previous day lows here as well. What we're going to have marked out is our 678 previous day lows. And then we're also going to have this higher time frame key level marked out, which is our 674. So similar game plan to yesterday. What we're going to wait for is really that first 5 to 15 minutes to give us a clear direction on where the market wants to head. Yesterday, the game plan was, right, we're fairly neutral. We already had a big push into the overnight session, came back up, reclaimed back above key levels. We're going to wait for that first 5 minutes. First 5 minutes of market open, aggressive buyer stepped in. So we're looking for that trade back towards the upside. Similar thing here today. We're going to wait for that first 5 to 15 minutes of market open. What I'm going to wait for today is really the reaction that we have off this previous day lows. If we can reclaim back above, then we could be looking for this mean reversion back towards the upside, towards our 682. If we do reject, one of my main theses coming to market open is going to be this pop and fade. So we end up having a big push in the overnight session, a little bit of a bounce here. If we can pop up and towards our previous day lows, reject, then we could be looking for this trade down in towards our pre-market lows and potentially below. So we're going to keep an eye out on the pop and fade today off our previous day lows here on the SPY for continuation towards the downside. Based off the higher time frames, as I mentioned, what we do want to see is eventually the break on the daily chart. So until we can break outside this range on the daily time frame, I'm just going to be a little bit more cautious here on the overall markets for potential mean reversions. But once we eventually do break outside this range, because it's only a matter of time, then we can go for continuation towards the downside. Okay, let's go back onto the ES here. Let's draw out the key levels that we do have. Someone's asking if this is pre-recorded. I mean, it can't be pre-recorded if we're going over the exact levels. So for the ES, the key levels that we have here is all the way down in towards this 67.50 here. So this is what we have on the higher time frames. As you can see, price ended up pushing down here. A little bit of buyer stepped in, and now we're just back closer to our previous day lows. So this is going to be the key level coming to today here as well. What we're going to have marked out is going to be the 68.10. That is the key level moving forward, plus our higher time frame key level. So if we do want to see some downside, right, what I'm going to be looking for is a pop and fade. Pop and fade here offers 68.10 for continuation towards the downside. Another possible scenario is some sort of opening range break, right? We could be looking for the 5-minute opening range break for a continued push towards the downside, or we'd have to be looking for shorts all the way underneath our last week's lows, our pre-market lows, which is our 67.50. So this is what we have for the ES coming into market open here. What else do we have for some upside? It's going to have to be the reclaim back above our 68.10. Only way I'm interested in upside above 68.10 for continuation towards the upside, right? Of course, we're going to be looking for that pop and fade coming into market open. I know right now there's a lot of levels kind of drawn out. There's a lot of things kind of going on. But as you can see, right, we've had a lot of volatility in the past, really yesterday, plus, right, a bunch of the overnight sessions. This was from Sunday. And of course, let's actually mark this out. So this is the start of Sunday, right? Market open. And then you can see on Monday, big push towards the upside. And then right in the overnight session, now we're all the way back down in towards the low that we created in the overnight session on Sunday. And now you can see we're bouncing right back towards the upside. So look at this volatility that we've had so far within the first day, and not even a day and a half here in the markets. As I mentioned, there's going to be less of a clear direction here on the higher time frames just because there's a lot of uncertainty right now. So what we're going to do is just base it off of key levels that we're going to have marked out. So as I mentioned, right, we're just going to have marked out our previous day lows. To keep it simple, right, longs above our previous day lows for continuation back towards upside. Right, we're going to maintain a short bias if we can maintain underneath our previous day lows for continuation. So if you just want to draw one level, this is the level that we can have marked out. Besides that, I have a couple other levels drawn out, which might make it a little bit confusing, but really our key level is just going to be that previous day lows. So that's what we have coming into market open here. Now let's go on to the NQ. Let's go on to the higher time frames here. So similar thing here for the NQ. What we have here is just this range here on the higher time frames. As you can see, primarily market's just been ranging in between these key areas. Yesterday, nice bounce right back into the middle. Now, as you can see, we're back down in towards the low of the range. What I personally would like to see is eventually that break towards the downside. I've been waiting for the SPY and Qs to break outside this range for a while now. If we're looking at the Qs, it's been really ranging, I'd say, since December or even November of last year. So you've been ranging for the past 2 to 3 months here on the markets. SPY ranging here as well. We want to finally see that range break and start seeing some continuation towards the downside. So if we're looking at the QQQ on the lower time frames here in the past 20 to 40 sessions, key levels that we have marked out is of course our 620 along with our 596. If you want to see continuation lower, now we need to see that break underneath that 596 moving forward. Let's go back onto the lower time frames here. Key levels that we have marked out is going to be that basically that 596 as I mentioned. Currently what I have marked out is this 594. And now I also have marked out your previous day lows. I'll actually just mark this out, which happens to be our 599. So coming into today here for the QQQ, key level here, previous day lows, multiple touches in the pre-market. As you can see right here, if we want to see some upside, as I mentioned, we need to see the reclaim back above 599 for any sort of continued push back up in towards our 603. If we want to reject off this level, coming to market open, we can be looking for the pop and fade down in towards our pre-market lows here and below. So keep an eye out on your previous day lows. That's going to be the key level for both the SPY and the Qs today. I like this level a little bit better here on the QQQ. So keep an eye out on your 599. Let's go on to the NQ. Basically similar thing here, but let me just kind of refine some of the levels that I have marked out. So previous day lows is going to be that key level as I mentioned, along with their Sunday's open. And then the other level that we can have marked out now is just going to be this level, which is back from February of earlier this year. And we could drag it down in towards our pre-market lows. So coming into market open here, key levels that we're going to have marked out is going to be our previous day lows, 24,600. If we can reclaim, we can see a pushback towards the upside. If we reject, which is one of my main theses coming to market open, is going to be the pop and fade for a continued push down in towards our pre-market lows here and below. So keep an eye out on our previous day lows here as well. As I mentioned, I am open to playing both sides here in the markets. The best is to not come into the markets with a buy, since technically we are still inside of the range. So until we can finally break outside this range, we're going to have a soft bias. If we can break outside this range, then we can lean more towards the downside, of course, if we break below the range. So that's what we have for the NQ, along with the rest of the major indices coming into market open. Now I'm going to head on to the SMH along with some other major indices. Then I'll go on to the tech names, and then we can take a look at gold and silver, which is currently dropping here as well. All right, let me grab some water. If you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, appreciate it if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below. What's up? Where did I get that 603? 603 was just our low that we created here on Friday. Multiple touches yesterday as well. That was essentially that low on Friday. Does anyone else think the SPY is going to drop today? So the SPY is already down a decent amount along with the Q. So already down 1.4%, which is a pretty big drop already for a pre-market. But of course, in this case, what we have is news. So if the markets do want to head lower, it's going to have to be the rejection underneath our previous day lows. Right, already, whenever we have big moves in the overnight session, usually makes it for the New York session a little bit more choppy, and there's going to be less range. But of course, there's a lot of volatility, right? We could very much well pop, right? Reject off this level and come right back towards the downside. If we get above, then be a little bit more neutral and potentially look for an upside move. But in this current market, right, the ATR, right, compared to the average ATR is going to be a lot bigger just because we have something, right, with a big news event. So the volatility is going to be elevated. All right, let's go on to the SMH. So as you can see, a couple of these semis pulling back. If the overall market pulls back with the SPY and Qs, and let's say we do break towards the downside on the higher time frames, we're going to have a significant pullback on a bunch of these other tech names as well. So a lot of these tech names already dropped. And if we have a bigger push on the SPY and Qs towards the downside, since technically, right? If you're to look at it on the higher time frames, currently it makes it seem like we're down a lot more than we actually are, right? The VIX last year, so we're getting another pop on the VIX here, close to 25 or sorry, close to 25, right? Almost at 30 here. Last year we had a nice pop on the VIX up in towards 50. This was during April, right? Right now the VIX is at 25, and it makes it seem like we're down a lot more. The market sentiment's very weak currently, and it seems like we are very far away from all-time highs. But if you're actually looking at it, we're only down about 3% from all-time highs, right? We've been consolidating for a while now, but based off the market sentiment, it makes it seem like we're down 10, 15%, but we're only down 3% off the high. So SPY and Qs, right? Until we can break underneath our 680 along with that 677, right? That's when the real drop's going to happen, if we can break underneath those key levels. All right, let's go back onto the SMH here. So for the SMH, as you can see, still bullish here, but overall higher time frames, of course, momentum is slowing down, broke underneath key levels, and now we're having a little bit of a pullback. So for the SMH, key levels that we have marked out is our 406. Other levels that we have marked out here as well, which is our 400. So as you can see, nice pop up and towards our 406, drop in the overnight session. Now moving forward here, key level is going to be our 398 moving forward. Rejection off this level, we can see continue push towards the downside. If we can reclaim, then we can see this potential push up and towards that 406 here. So that's what we have on the SMH. And then for the IWM, this one seems like it's finally potentially breaking the low of the range here. Key levels, of course, we're going to have marked out 260. I'm not sure how many people are looking at the IWM as of recent, since we're just consolidating, but now breaking underneath. Let's see if we can use this level as a retest. Okay, now let's go on to some tech names and what we have coming into today. We're starting off with Tesla. Let's remove some of the drawings here. So for Tesla, as you can see, right at the low of the range here, a little bit of buyers stepped in yesterday, but overall higher time frame still bearish. As you can see, every pop is being shorted. So for Tesla, if we can break underneath our 390, continuation back down in towards that 360 here is in play on Tesla, especially if the market does want to drop here as well. As for the key levels that I have coming to market open, let's go on to the lower time frames. What I have marked out here is going to be our previous day lows. I have our 394 along with our 404. So for Tesla coming to market open, we're just gapping down right in towards that previous day lows. If we do want to see some downside here now, it's either going to be the break underneath our 394 for continuation lower, or now it's going to be the shorts underneath our 390 for a continued push towards the downside here as well. So these are the two scenarios that we have for Tesla for some downside movement coming into market open. Currently, with the buyers are stepping in, right? Long scenarios, you could very much well look for that mean reversion back above our 394, or if price came down very aggressively and buyers stepped in, then you could be looking for the previous day low mean reversion for a pushback towards the upside here as well. So this is what we have for Tesla. As I mentioned, right now we're currently in a market environment where there's a lot of mean reversions. Once we finally do break outside the range, that's when we can have a little bit more of a hard bias towards the downside. But before then, we have to be very cautious of reversals in the markets, since that's what's been happening for, I'd say, the past 3 weeks in specific, and of course on the higher time frames in the past 2 to 3 months. Okay, let's go on to the Nvidia chart. Let's go into the higher time frames here. So Nvidia, nice pop with earnings, and then of course we rejected off this level and came right back towards the downside. So key levels that we have is the high, and of course higher time frame, we have our key level support, which is down in towards that 172. Nice little pop yesterday on Nvidia. Higher time frame, I would like to see it eventually gravitate back down in towards that 172 here. So for Nvidia, nice pop yesterday, a little bit of rejection here, now gapping down. Key levels that we have coming into today is going to be our low that we created here on Friday, 177. If we can break back underneath that 177, we can be looking for a push down in towards our previous day lows. and potentially below, which is our 172 here on the higher time frames. If we want to see some longs, right, potential bounce play here off our 177, or now it's going to be above our 178 for a push up in towards that 182. That's going to be the mean reversion for today. But of course, if you see some downside underneath that 177. Let's go into AMD. AMD is one of my favorite names for some downside based off of the higher time frames, just because we have a gap. But you can see how many times we've been defending this level. AMD 192 here. If we can get a daily candle close underneath, we can see room down in towards our 184 and potentially that full gap fill, which is that 172. So for AMD, multiple touches, as you can see. So until we can finally break underneath our lows, 192 with a daily candle close, we're going to be a little bit more patient. But the key levels that we have coming into today, what we can have marked out here is going to be that 195. Let's actually just refine these levels really quickly. Right, what we can have marked out here is going to be that 195, and then now we can also mark out our previous day lows, and we could drag this up here as well, which is that 190. So for AMD, coming into market open here today, let's keep an eye out on our 194 along with our previous day lows 190. If you want to see some downside here, pop and fade, 194 for continuation towards the downside. Another possible scenario underneath 190, previous day lows for continuation lower here as well. So two scenarios for the downside here on AMD. If we can break underneath, as I mentioned, right, downside right now, the markets could very much well reverse off the lows today. As I mentioned, once we finally get that daily candle close, or finally we break outside the range, that's when we can lean a lot more towards the downside. But for now, we're going to have a little bit more of a soft bias and a neutral stance coming into market open. As for AMD, right, potential mean reversions in play off our 190, or now it's going to be the reclaim back above that 195. As for Apple, key levels that we have, not really too much to talk about here on Apple. A little bit of a mean reversion. Key levels that you're going to have marked out coming into today. And moving forward, we could now just mark out that previous day lows. And then this level we can refine just a little bit up in towards that 263.50. So for Apple, a little bit of buyer stepping in here off that previous day lows. Longs are in play off our 260.50, are now above our 264. Shorts are in play underneath 263, are now underneath that previous day lows for continuation. As for the rest of the tech names, as I mentioned, so a lot of these tech names are dropping, specifically in the Mag 7 towards the downside. Something like Google breaking underneath key levels. Now we're at the low of the range, as you can see right here. So a lot of these names are going to have bigger pullbacks, especially if this SPY and Qs does want to drop. So something like Google, right? All these names, Tesla, right? Nvidia, AMD. If we do get that break outside the range, which is going to be key, right? I've been talking about this for a very long time, since we've just been consolidating, right? The past few months, we've been waiting for the Qs just to do something. We want to see the Qs either break above or below this range, right? Break above all-time highs for continuation, or break below the range for continuation towards the downside. That's when we're going to start seeing a lot more trends here in the markets. A similar thing here to SPY, right? We've been waiting for this SPY to break above all-time highs or to break the low of the range and continue towards the downside. So we've been waiting for the range break here on the major indices for a clear trend. As of late, just a lot more mean reversions. So we're going to continue to think about mean reversions until we can finally break and start trending again here in the markets. As for Microsoft, closer to the low of the range here. Not really too much to talk about on this one, but clear downtrend here in the markets. Key levels that you're going to have marked out on Microsoft is going to be our 394, rejection off our 394, continuation down in towards our previous day lows, and of course the low of the range, which is going to be our 384. The reclaim, we can see a push back up in towards our 400. As for the rest of the tickers, right, a lot more consolidation here as well, right? Meta consolidation, keep an eye out on the reaction that we have off our 650. And then for the rest of the tickers, really not too much. As you can see, Amazon, a lot of consolidation. The Mag 7 names, A lot more consolidation as of recent or bigger pullbacks compared to the overall market. So there hasn't been too much of great opportunity specifically towards the upside. And of course, the mean reversions are a lot better on the major indices themselves. As for Netflix, nice pop above key levels yesterday for continuation higher, but now we're right back at our 95 key psych level. If you do want to see some downside, potential mean reversion back down in towards our 91 here is in play. If we want to continue towards the upside, we need to see that reclaim back above our 95. Okay, so that was a decent amount to kind of go over. We still have a bunch of other tickers to talk about here as well. So if you guys do have any charts or any tickers you'd like me to go over, you guys can now drop them in the chat. If you guys are enjoying this so far, appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below as well. All right, let's go on to Palantir. Mean reversion. Mean reversion is more just like reversal. So whenever price has a big move to either side, usually price likes to be balanced or price likes to revert back to the mean. So if we have a big push, right, price never just moves up in a straight line, it has a pullback. Similar thing to the downside, it never just moves down in a straight line, it always pulls back for like a healthy trend. So for Palantir, coming into today, as you can see, nice kind of pop yesterday, with some news. Now we're underneath our previous day low. So Palantir, we actually have a pretty big gap towards the downside that it could very much fill. So if we break underneath our previous day lows, gap fill towards the downside here is in play. So for Palantir, coming into today, some of the levels I'm going to have marked out is just going to be that previous day lows. Previous day lows is key. Break underneath our gap previous day lows, we can see this gap fill down in towards our 137. If we maintain above our gap fill, potentially we can see this gap fill back towards the upside. So we actually have two gaps. So we have a gap down, and then we have a gap up over the weekend. So two gaps here on Palantir, right? You could be looking for either gap fill, right? Most likely the gap fill that is going to fill underneath previous day lows, we can see continuation lower. Let's go on to a few other tickers here. MU. MU, this one just been consolidating. Really not too much to talk about. We're actually now just breaking the low of the range, which is our 396 with the overall market here as well. Next level towards the downside, 368. So for MU, we're just kind of back inside of this consolidation here. Really the only level you need to have marked out here now is just going to be that 396, essentially our previous day lows. If we maintain underneath previous day lows, continuation down and towards that 370, reclaim back above, we can see this mean reversion back up and towards that 412 here. As for all the other tickers, let's go on to SNDK. This one dropping towards the downside here. Just a lot of range. As you can see, that's why it's been a lot more difficult to trade the past few weeks in specific. February has been fairly difficult just because there's a lot of range here and there hasn't been any higher time frame moves. If you're looking at SNDK, right, a lot of range here in the overall markets, right? MU, a lot of range. If you just look at the Qs and SPY themselves, right, look at how much range there is, right? There's not really too much to talk about until we can break outside this range. So that's why if we're just kind of marking out this general area, if we can finally break outside this range, that's going to be key. But we've already bounced here multiple times. I wouldn't be surprised if we do get that bounce and we just come right back up and towards that 604, since that is what the market has been doing quite a bit. So until we can break below with a lot of strength, or even on the daily chart, that's when we're going to be more aggressive towards the downside. Before then, we're going to be a little bit cautious, right? Currently, we are rejecting off our previous day lows, but coming to market open, it very much well could reverse and come right back up and towards our 600 key psych. Okay, now let's go on to gold, silver, and then I'm going to get ready for market open here. Expecting a great trading day with you guys today. Let's get it. Yeah, hopefully we'll see some nice volatility, right? This market, as you can see, there's plenty of opportunity here in this market, and we really have to base it off of intraday price action. Since a lot of things move quick, not really a clear hard time frame direction, we're going to have to use our intraday price action and really base it off of, right, the opening ranges, right, the reaction that we have off key levels. So today, right, similar thing to yesterday, we're going to use that 5-minute opening range along with our previous day highs that we do have. All right, let's go on to gold and silver really quickly. But as you can see, a little bit of reaction off our key level. And I can see we're actually pulling back right in towards our key retest level, which we originally broke out from. So this is the key level here on gold. If you want to see some buyers, right, maintain above our 5150s for any sort of push towards the upside. That's going to be the key level here for silver. Now the key level here is going to be this higher time frame level of support, which is all the way back down in towards our 76. So that's going to be the key level here. Silver broke back underneath this 88. So let's go over the game plan coming into today. As you can see, a little bit of a drop here in the pre-market. We're kind of rejecting right off our 678 coming into market open here on the SPY, and then the Qs, we're kind of rejecting right off our previous day lows coming into market open. So the key level, as I mentioned, coming into today is just going to be that previous day lows. And we're going to also mark out now, it's going to have to be that pre-market low here as well. But if we do want to see any sort of continuation lower, pop and fade here off our 678 for continuation lower. Or now it's going to be shorts underneath our pre-market lows for continuation. Similar thing here with the Qs. We're going to be waiting for pop and fade off our previous day lows, 597, or now it's going to be shorts in play underneath our 593. These shorts down underneath our pre-market lows, I would be a little bit more cautious of, just because we already had such a big push lower. If you're chasing shorts all the way towards the downside, it very much well could have a bounce, so you have to be cautious. I much rather like this previous day low short, which is low risk, than shorting all the way down in towards our 593. So that's something to keep in mind. We could very much well have a bounce coming to market open, so just be a little bit cautious. As I mentioned, wait for that first 5 to 15 minutes today, very similar to yesterday, just to wait for the reaction that we have off key levels. You don't have to be in this market. You don't have to be the first one. You don't have to get the lowest risk entry, because there's a lot of opportunity. So you don't have to be the first one to capture a reversal or the first one to get into a position trying to anticipate something. It's better in this market just to wait for the reaction that we have off key levels and then base your trade off that, because as I mentioned, there's a lot of volatility plus continuation intraday where there's enough opportunity. So even if you miss the first trade, you can look for the second entry, or you can look for another re-entry on any ticker that you are trading. So that's what we have. As for Tesla, keep an eye out on our 395 today, along with that 390 potential break underneath, or underneath that 390 for continuation. Nvidia is on watch here as well, underneath that 175 for continuation towards the downside. As for AMD, as I mentioned, keep an eye out on our 190 break underneath for this continuation lower here as well. So that's what we have on a couple tickers. So keep an eye out on really just the SPY and Qs, right? That's going to be the main thing, of course, moving forward. And then we'll keep an eye out on Tesla, Nvidia, and AMD right off our previous day lows, which is going to be key. As for the rest of the tickers, right, you can also keep an eye out on these ones as well, but a lot of these other ones are ranging. So I'll be a little bit more cautious. But we can definitely keep an eye out on Nvidia, AMD, and Tesla. And then I would even be opposed to trading the SPY and Qs, of course. So that's what we have for today. I'm going to get ready for market open here now. As I mentioned, in this market, until we can finally break outside of this range, it could happen today, or we could just reverse right back inside this range. So as I mentioned, right, come into the markets with a soft bias, right? Don't be overly biased towards the downside, just because right now, currently market sentiment's bearish, right? We're dropping here in the pre-market. Of course, I am leaning more towards the downside, but if the market wants to have buyers step in right off the bat, then I'm not going to be looking for shorts intraday, right? So if buyers step in, similar thing to yesterday within the first 5 minutes aggressively, then right, don't have a clear short bias. If the markets want to stay heavy, right, reject off our previous day lows, then we could be looking for this short. So that's what's going to be key. As I mentioned, wait for the first 5 to 15 minutes coming into market open here today. Stay safe out there. As I mentioned, with this volatility, right, it's very good that we have this volatility, but you also have to be cautious and size accordingly. But yeah, that is going to be it for me today. I'm going to get ready for market open here now. So if you guys did enjoy that, appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below. Yeah, that's going to be it for me today, and I will see you guys all tomorrow. All right, take care, everyone. Have a great rest of the day. Peace.